Good evening, everyone. Welcome again to another live streaming of basic transfer pricing. Today, our topic will be the continuation in our discussions with the business restructuring. But before that, I would like to say thank you po sa mga subscribers natin. Umabot na tayo as of now, January 13, 2021. Umabot na po tayo ng 376 subscribers. Thank you very much. And for those na hindi pa po nag-subscribe, please subscribe to our channel. Okay. So, may shoutout tayo, Hari? Okay. Ilan yung viewers natin?
5 viewers.
Okay. So, this is a continuation of our business restructuring topic, which is the last topic for this OECD 2017 transfer pricing guidelines, no? So, after this, pag natapos na po natin lahat ng topics natin, no, yung sabi ko sa inyo na talagang pinagtiyagaan natin itong topic na to because ito po yung pinaka-mother ng transfer pricing, yung OECD transfer pricing guidelines, which is the basis of all transfer pricing guidelines in the world, no? So kahit na yung United Nations Manual of Transfer Pricing, ito pa rin po yung basis. Why? Because the effort ng OECD, which is the Center for Tax Policies and Administrations in the world, sila po yung gumagawa talaga ng study, deliberations with our taxpayers, no? Yung mga members talaga, yung mga tax authorities in different countries para po magkaroon tayo ng rules and regulations and guidelines po sa transfer pricing. So, ito yung last topic natin, business restructuring. We started with the arm's length principle, tapos yung ating transfer pricing methods, the comparability adjustments, yung mga documentation, and then yung dispute resolution. And then we have the cost contribution arrangement, intra-group services, intangibles, and then ito na po yung pinaka-last natin, the business restructuring, which subukan natin noon na matapos natin ngayon. If not, then we will continue with our next live streaming next week. And then, ang susunod po natin na itatackle natin during our live streaming will be yung ating tax cases. Yun po yung mga popular tax cases in the world, mga celebrated transfer pricing cases in the world. I-discuss po natin sa inyo yan. Isa-isa, subukan natin na matapos natin isang case in 2 hours, no? Pero kung yung mga mahahabang cases na it took the court 5 years, 7 years, 10 years to resolve, siguro hindi rin natin kayang tapusin yan within 2 hours. Why? Kasi ayokong skip yung mga important point of discussions po, especially sa transfer pricing. Kasi napakagaganda po ng mga cases na yung mga important points, mga salient points talaga ng isang kaso ay maganda po siyang i-discuss, especially yung mga transfer pricing cases. Because may mga nabasa po akong cases na as much as 14 transfer pricing issues ang i-resolve mo. So it took the court how many years to resolve those cases? Kaya gusto ko na i-discuss din po yan sa inyo. And in that cases, hindi po natin kaya i-discuss yan ng 2 hours. So siguro mga 4 hours or 6 hours depending on the topics, no, yung complexity ng case na i-discuss natin. But I assure you na you will enjoy po the transfer pricing cases. No? Kasi when I started with my transfer pricing career, way back 2008, when I first studied with the IBFD, yung International Bureau of Fiscal Documentation based in Amsterdam, Netherlands. Yung unang course ko po dito, kinuha ko sa Malaysia, no, sa Kuala Lumpur. And I really enjoy transfer pricing. From that time, 2008 hanggang ngayon po, talagang hindi ko binitawan yung transfer pricing because I enjoyed the topic at saka ang dami mo pong matutunan because this is a higher level of taxation po yung matutunan natin dito because ang transfer pricing is economic taxation, no? Kaya sabi ko sa inyo, pagka gumawa kayo ng transfer pricing team, hindi siya po pwede na accountant lang yung member, no? So there should be an accountant, a lawyer, statistician, economist, and industry expert, no? So yun talagang ideal na transfer pricing team. Kasi yung mga kagaya na lang ng legal issues. So it should be resolved by a lawyer. Yun namang accounting sides. So accountant po ang magre-resolve doon. And then, sino yung mag-interpret ng data? Of course, the statistician. Sino yung mag-interpret ng mga economic conditions? Of course, the economist. No? Kasi kaya nga sinasabi siya na economic taxation. And yung industry expert, no? Kasi iba-ibang industries po to, iba-iba yung operations, so dapat may industry expert din po na kasama yung transfer pricing team. Okay. So, business restructuring, uh, naumpisa na po natin to, and today our topic would be which party should ultimately bear the cost related to the indemnification of the party that suffers from the termination or renegotiation of the agreement. Kasi kung balikan po natin, bakit ba nagre-restructure ang isang company? Maraming reasons, no? Pero ang pinaka-core or yung bottom line is the benefits na makukuha nila, kaya sila nagre-restructure. And ano po sabi ng transfer pricing? There should be a business reasons or the rationality of commercial transactions kung bakit po nila ginawa yon. Because pag that can be disallowed. Bakit siya i-disallowed? Kasi pwedeng gawa-gawa lang, panggulo lang, na wala namang business reason. So, for transfer pricing audit, i-disallow lang po siya. No? So, marami ng mga cases na ganyan na hindi siya ni-recognize ng court, ang business restructure. And in fact, for your information po, yung ating Philippine Competition Commission, which is under the Office of the President, 6 po ng kanilang mga field officers nag-aral po dito sa atin ng basic transfer pricing po yung na po dito sa atin nag-approve ng mga business restructuring po. At ang result doon is yung 1 billion tapos ngayon tinaasan nila ng 3 billion. Kaya nakita na medyo malaki yung sa business restructuring na naman. Sige. Okay, so pasensya na po kayo at may problema tayo sa audio. Ano lang, ayusin pa po namin to. Although, trying hard na mag-improve yung ating facilities, no? So, sorry po sa mga, ano natin, intermission. No? Okay. So, balikan po natin yung ating topic. Ano po yung ginagawa ng Philippine Competition Commission? The Philippine Competition Commission has been established during the time of President Noynoy Aquino. And it is the commitment of President Noynoy Aquino to the ASEAN. No? So, for the first time na-establish po yung Philippine Competition Commission, ito yung katapat ng antitrust law sa United States or sa Amerika. No? So ano yung ginagawa nila? Minomonitor nila yung restructuring ng business, acquisition ng business na may economic impact. At pag mayroong economic impact yan, halimbawa na lang, napakalaking negosyo, no? Tapos bibilhin ng isang may-ari lang, so sa kanya na lahat, mamonopolize niya yung, halimbawa na lang, telecommunication company, hindi siya papayagan. Or, papayagan man siya, pero may covenant or may commitment na hindi siya magtataas ng singil niya for a certain period of time, no? Tapos kung may mga violations, nag-i-impose din po sila ng penalties. Okay. So restructuring is very important also in transfer pricing, and the issue in restructuring pagdating na po sa transfer pricing is the remuneration, that it should be at arm's length. At ano po yung arm's length? Ang sabi po sa atin, under Article 9 of the OECD Model Tax Convention, na ito pong arm's length dapat kung ano yung transaction ng related party should be at par or similar to that of the independent party. Why? Because the true transaction is that of the independent party, because that is influenced only by economic conditions. Samantalang ang related parties are influenced by control between the group. So, which party should ultimately bear the cost related to the indemnification of the party that suffers from the termination or renegotiations of the agreement? That resulted nga po sa restructuring. Kasi nagbago ka, ni-restructure mo yung business. So, may na-terminate na agreement, so may nawalan ng income. No? So anong sino magso-shoulder ng cost noon? Sino magbabayad? No? Okay. Sabi po ng guidelines under 9-93, the transfer pricing analysis of the arm's length nature of the conditions of the termination or substantial renegotiation of an agreement should take account of both the perspectives of the transferor and of the transferee. Kasi sa restructuring, halimbawa, ang restructuring is transfer, no? Transfer of intangible assets. So, it should be considered on both perspectives. Kanino po perspective? Sa transferor, yung nag-transfer, at saka yung transferee, yung tumanggap nung transfer na yon, no? Kung halimbawa, intangible siya, so sino yung bagong owner na ng intangibles? Taking account of the transferee's perspective is important both to the value, the amount of an arm's length indemnification, if any, and to determine what party should bear it. It is not possible to derive a single answer for all cases, and the response should be based on an examination with the facts and circumstances of the case. Yun po yung palaging ini-emphasize ko po sa inyo. And even in our 5-day certificate program in transfer pricing. Kaya nga sabi ko sa inyo, pagkatapos na nitong topics na ma-discuss na natin to lahat, we will discuss with the cases, no? And every transfer pricing case is a unique case, no? So, po pwede na, kasi worldwide po ang consideration ng transfer pricing cases. So, pwede na yung isang transfer pricing case decided by the Australian court, pwede siyang gawing precedent ng Canadian court, no? Kasi ang issue doon is transfer pricing. So, i-discuss natin yan sa inyo together with the president, no? Kaya nga ang sabi dito palagi, no, binabalik-balik ko talaga sa inyo na every transfer pricing case is unique and you have to consider the facts and circumstances of the case. Why? Because transfer pricing cases and even transfer pricing audit are factual in nature. Ibig sabihin ng factual in nature, kung ano yung totoong nangyari, hindi yung ito yung decision dito, ito yung resolution dito, kasi ito yung nangyari. No way. Hindi po ganun, no? So, every case, no? Consider the circumstances of the case. And in particular, of the rights and other assets of the parties, of the risk assumed by the parties, of the economic rationale for the termination, of the determination of what party or parties is or are expected to benefit from it, and of the options realistically available to the parties. This can be illustrated as follows, no? So, one thing po na nagustuhan ko itong transfer pricing, kasi yung point of argument, yung point of reasoning is something very logical, no? Talagang, kung baga sa yung nag-iisip ka, talagang malalamnan ka ng pag-iisip mo, kasi parang ginawa talaga siya ng mga tao na talagang nag-iisip, no? So, ito po yung example, paragraph 9.94. Assume a manufacturing contract between two associated enterprises, no? Entity A and entity B is terminated by A, being the manufacturer. Assume A decides to use another associated manufacturer. So, ibang manufacturer na naman yung ginamit ni A. Entity C, no? To continue the manufacturing that was previously performed by B. As noted at paragraph 9.78, there should be no presumption that all contract terminations or substantial renegotiation should give a right to indemnification at arm's length. No? Assume that it is determined based on the guidance in this section that in the circumstances of the case at arm's length, B would be in a position to claim an indemnification for the detriment suffered from the termination. So in this case, magpapabayad si B kasi yung kanyang functions na siya yung manufacturer, dati ni A, terminate na. So, bakit? Kasi si A, hindi na nagpapamanufacture kay B, doon na kay C. So, B suffers damages. So, anong ginagawa niya? Magpapa-indemnify siya o sinisingil niya ng bayad si A dahil nawalan siya ng income because of the terminated contract, no? Na magmamanufacture. So the question arises as to which party should ultimately bear the indemnification to be paid to B, no? So, ito na yung question. Sino yung magbabayad kasi nawalan ng income si B? Is it C, na siya na ngayon ang kikita dahil sa kanya na yung kontrata? O si A, dahil siya yung may gusto na i-terminate yung contract, no? Okay, so ito po yung sabi ng guidelines. A, for instance, the party terminating the contract. C, for instance, the party taking over the manufacturing activity previously performed by B or another party in the M&A group benefiting from the restructuring. So akala natin yung dalawang party lang ang uh, pwedeng magbayad, no? Pero sa transfer pricing guidelines, meron pa palang another party. Sino yun? Yung member of the group. Kasi related parties po yung pinag-uusapan natin sa transfer pricing. So, sino yung third party? The other party in the group will be benefited from the restructuring. So, it can be another party, not A and C, no? So, kung sino yung benefited, kasi kaya nga maganda ang transfer pricing kasi it's an economic taxation. Kasi tinitingnan kung sino magbe-benefit doon sa transactions. Hindi yung sila yung party, pero sa totoong pangyayari, hindi naman sila yung benefited. No? Kasi ginamit lang sila halimbawa na dami. Iba yung talagang totoong nakinabang. So, kaya nga sabi natin, circumstances of the case, actual. No? Yung titingnan mo, sino ba nakinabang? Kasi sa transfer pricing po, economic taxation, economic substance ang hahanapin mo. Ang dapat magbayad kung sino yung nakinabang. No? That's economics. So, the analysis should start from the accurate delineation of the actual transactions comprising the business restructuring and take into account economically related transactions with other enterprises in the M&E group that may help to delineate the controlled transactions. So, yun ang kagandahan po talaga ng transfer pricing since economic substance yung hinahanap. So, titingnan. Hindi yung, kasi yung iba, di ba, kahit sa atin, personal natin na buhay, kung minsan, yung nakikita lang natin, doon lang tayo magde-judge, no? Minsan, kilala mo yung tao, based lang doon sa nakikita mo. Pero, hindi pa pala yun. Because sa transfer pricing, economic taxation, substance talaga ang tinitingnan. So, kung titingnan mo, siya sa kanya to. Kasi sa kanya nakaregister, siya yung may-ari ng kotse, siya yung may-ari ng bahay, siya, ng ganon. Pero hindi pala. Bakit? Kasi pinangalan lang sa kanya ng totoong may-ari. No? So, ganyan yan ang nangyayari sa business. No? Hindi pala siya yung totoong may-ari ng business, ginamit lang siyang pangalan na dami, front, para doon sa business. So, sa transfer pricing, hahanapin kung sino yung real party who will be benefited on the transactions at siya yung itatax. So there can be situations where A would be willing to bear the indemnification cost at arm's length. For instance, because it expects that the termination of its agreement with B will make it possible for it to derive cost savings through its new manufacturing agreement with C. So sino? Ang number one consideration, si A daw, kasi siya yung benefited. No? Siya yung nagkaroon ng savings doon sa manufacturing agreement with C. No? And that the present value of this expected cost savings is greater than the amount of the indemnification. So, mas malaki yung savings ni A, mas malaki pa doon sa ibabayad niya kay B. Okay. So, there can be situations where C would be willing to pay an upfront fee to obtain the rights to the manufacturing contract from A. No? Parang lump sum na bibilhin mo yung magbabayad ka ng payment para makuha mo yung kontrata. No? So, pwede yung mangyari din yun, magbabayad si C. So, if the present value of the expected profits to be derived from its manufacturing contracts makes it worth the investment for C. In such situations, the payment by C might be organized in a variety of ways. For instance, it might be that C would be paying A, or that C would be constructively paying A by meeting A's indemnification obligation to B. So, pwedeng bayaran ni C, si A, para ibayad din ni A kay B. No? Kasi ang nawalan dito, si B. No? Kasi si B, nagmamanufacture ng products ni A, bigla terminate ni A, at doon na siya nagpapagawa kay C. No? So, it is also possible that C would pay B, for example, in the circumstances where B had certain rights, and C would pay B for the transfer of those rights. No? So, po pwede rin na ganun ang mangyayari. So there can be cases where at arm's length, A and C would be willing to share the indemnification cost. So pwede din daw na share si A at saka B para sa ibabayad kay C kasi na damage nila si C, no? Nawalan ng trabaho si C dahil sa kanilang dalawa. So in cases where the benefits arising from the restructuring accrue to another party in the M&A group, then that other party may bear the cost of indemnification either directly or indirectly. Okay. I-shout out, Hari. Ilan yung nanonood sa atin? Okay. Okay. So, we're done with the part 1 of the business restructuring. Now, let's go with the part 2, remuneration of post-restructuring control transactions. Yung kanina sa restructuring proper, ito post-restructuring, tapos na yung restructuring, no? Okay. So, business restructuring versus structuring, no? Iba yung nag-structure ka pa lang ng business mo, iba yung ni-restructure mo na, no? Sa totoong buhay, kailan ba nagre-restructure yung company? Maghalimbawa, halimbawa na lang na example sa utang, no? Nangutang ka, hindi mo na mabayaran yung interest, hindi na lahat kasi wala kang means or that is very apparent now, especially na mayroong pandemic. So, anong gagawin mo? Restructure mo yung utang. Ano yun? Halimbawa, yung utang mo talaga is 100,000. Tapos nag-accumulate na siya ng interest for 1 year, halimbawa, or 2 years. O nagiging 130,000 na siya. No? So, yung 130,000 na yan sa utang mo, pag ni-restructure yan, gagawin nila, i-add nila yung interest doon sa principal. So, instead na yung utang mo, 100,000 lang, isama na nila yung principal, 130,000. So, yun na yung pinaka-principal mo. And then, doon ka na i-amortize na magbayad ka na naman monthly. Yun po yung tinatawag na restructure. Yung structuring na debt, yun yung nangutang ka pa ng 100,000. Ngayon, nagpa-restructure ka, ibig sabihin, binago mo yung conditions, bakit dinagdag mo yung interest doon sa principal. So, ni-restructure mo yung interest mo. So, yun po sa business. Ni-restructure mo yung business. Halimbawa, yung may mga operations ka na talagang luging-lugi na. So, ano ginawa mo? Ipa-restructure mo. O kaya, ibenta mo na yung part ng operations mo na lugi. O kaya, anong nangyayari? Anong ginagawa ng maraming foreign companies ginagawa dito sa Pilipinas? Ina-outsource yung kanilang operations. Paano nila ina-outsource? Kaya ang daming BPO sa atin, no? Business process outsourcing. Kasi, instead na sila yung mag-maintain ng isang line of service nila, pinapa-outsource, pinapagawa na dito sa Pilipinas, mas nakakamura pa sila. No? So, yun po yung tinatawag na restructuring. The general principle, no different application of the arm's length principle. Okay? Ano po yung arm's length principle sa mga bago lang natin nagtutune in sa atin? So, the arm's length principle requires that the related party transactions should be at par or similar with that of the independent transactions. Yan po yung requirements or ibig sabihin ng arm's length principle. No? So, the arm's length principle and these guidelines do not and should not apply differently to post-restructuring transactions as opposed to transactions that were structured as such from the beginning. Doing otherwise would create a competitive distortion between existing players who restructure their activities and new entrants who implement the same business model without having to restructure their business. Comparable situations must be treated in the same way regardless of whether or not they came into existence as a result of a business restructuring of a previously existing structure. The selection and practical application of an appropriate transfer pricing method must be based on the economically relevant characteristics of the transactions leading to the accurate delineation of the actual transactions, no? So ano sabi dito? Comparable situations must be treated in the same way, no? Whether or not they came into existence as a result of business restructuring. Kasi bakit sabi dito, they have to be treated similarly or in the same way? Anong ibig sabihin yan? Apply the arm's length principle. At ano yung arm's length principle? Dapat na ang related party transactions dapat pareho sa independent transactions. The selection and practical application, no, ng appropriate transfer pricing method. Ano yung mga transfer pricing method natin as a way of review? Ito yung 5 methods under the OECD model guidelines, no? So ano tong 5 methods na to? Ito yung comparable and controlled price method, the resale price method, cost plus method, and the transactional net margin method and profit split method, no? So may mga bagong video po tayo diyan, especially yung sa tested party natin, no? May video tayo diyan on what is a tested party kasi may mga queries tayo na receive diyan, and for your information, the tested party kailangan lang yan sa resale price method, cost plus method, and sa transactional net margin method. Yung comparable and controlled price method, profit split method, hindi po niya kailangan sa tested party. However, business restructuring situations involve change, and the arm's length principle must be applied not only to the post-restructuring transactions, but also to additional transactions that comprise the business restructuring. The application of the arm's length principle to those additional transactions is discussed in part 1 of this chapter. Ano yung part 1? Ito yung restructuring, no? Na itself, hindi yung post-restructuring. No? Okay, so what is the business before restructuring? Dito kasi, ang discuss natin sa part 2, post-restructuring na to, after the restructuring na. Okay. In addition, the comparability analysis of an arrangement that result from a business restructuring might reveal some factual differences compared to the one of an arrangement that was structured as such from the beginning as discussed below. These factual differences do not affect the arm's length principle or the way the guidance in these guidelines should be interpreted and applied, but they may affect the comparability analysis and therefore the outcome of this application. See section D on comparing the pre and post-restructuring situations. Yun yung bago ang restructuring at yung after na nag-restructure. Possible factual differences between situations that result from a restructuring and situations that were structured as such from the beginning. No? So where an arrangement between associated enterprises replaces an existing arrangement or restructuring, there may be factual differences in the starting point, in the starting position of the restructured entity compared to the position of a newly set up operation. Sometimes the post-restructuring arrangement is negotiated between parties that have had prior contractual and commercial relationships. No? So, may prior relationships na sila. Kaya nga, ang hinahanap sa transfer pricing yung related parties eh. Yung kumbaga sa ano, may pinagsamahan na yung sa atin. No? Kasi iba na yung treatment nila sa transactions. Hindi na yun yung true transactions. No? In such a situation, depending on the facts and circumstances of the case, and in particular on the rights and obligations derived by the parties from these prior arrangements, this may affect the options. Yan na yung sinasabi. This may affect the options realistically available to the parties in negotiating the terms of the new arrangement, and therefore the conditions of the restructuring and of the post-restructuring arrangements. See paragraphs 9.27, 9.31 for a discussion of options realistically available in the context of determining the arm's length compensation for the restructuring itself. For instance, assume a party has proved in the past to be able to perform well as a full-fledged distributor, performing a whole range of marketing and selling functions, employing and developing valuable marketing intangible assets, and assuming a range of risks associated with its activity, such as inventory risk, budget risk, and market risk. No? So itong mga sinasabi natin na risk, We tackle this under the FAR analysis or the functions, assets, and risk analysis. Assume that its distribution contract is renegotiated and converted into a limited risk distribution contract whereby it will perform limited marketing activities under the supervision of a foreign associated enterprise, employ limited marketing intangibles, and assume limited risk in its relationship with the foreign associated enterprises and customers. In such a situation, the restructured distributor would not be in the same position as a newly established distributor. So, yung mga gagawin po natin na mga future discussions natin, magsama na rin tayo ng mga case analysis, no? Kasi kagaya nito, this is already a case, no, na kung ano yung nangyari dito, no? Galing siya sa limited risk distribution na lang, so wala na siya masyadong risk. So what happened, no? Natanggal na sa kanya yung inventory risk, budget risk, market risk. So how the other party has been remunerated before and after the restructuring, no? Kasi tinanggal na sa kanya yung risk. So ibig sabihin, kakaunti na lang yung risk niya, so mas mababa na lang dapat yung ibabayad sa kanya when it comes to the pricing of the goods or services. Where there is an ongoing business relationship, yan na yung sinasabi natin. Kasi ang transfer pricing is related parties. So pag sinabi mo may related parties yan, there is a transfer pricing. Why? Kasi pag walang relationship, pag walang related parties, wala pong pinag-uusapan na transfer pricing. No? Where there is an ongoing business relationship between the parties before and after the restructuring, there may also be an interrelationship between, on the one hand, the conditions of the pre-restructuring activities and or of the restructuring itself, and on the other hand, the conditions for the post-restructuring arrangement as discussed in section C below. Some differences in the starting position of the restructured entity compared to the position of a newly set up operation can relate to the established presence of the operation. For instance, if one compares a situation where a long-established full-fledged distributor is converted into a limited risk distributor, no? So iba yung full-fledged distributor sa limited risk distributor, ha? Kasi sa limited risk distributor, konti na lang yung risk niya. So, what happened to the remuneration or compensation? Lower din, no? So, full-fledged distributor is converted into a limited risk distributor with a situation where a limited risk distributor is established in a market where the group did not have any previous commercial presence. No? Market penetration efforts might be needed for the new entrant, which are not needed for the converted entity. No? So anong epekto niyan? This may affect the comparability analysis and the determination of the arm's length remuneration in both situations. Ganyan po ang transfer pricing study. Konting twist lang, may pagkakaiba lang doon sa dalawang transactions, hindi na sila pareho, hindi na sila magiging comparable. Kaya mag-iiba na yung treatment mo on the transactions. No? So when one compares a situation where a long-established full-fledged distributor is converted into a limited risk distributor with a situation where a limited risk distributor has been in existence in the market for the same duration, there might also be differences because the full-fledged distributor may have performed some functions, borne some expenses, for instance, marketing expenses, assumed some risk and contributed to the development of some intangibles before its conversion that the long existing limited risk distributor may not have performed. Born, assumed, or contributed to. The questions arises whether at arm's length such additional functions, assets, and risks should only affect the remuneration of the distributor before it's being converted, whether they should be taken into account to determine a remuneration of the transfers that take place upon the conversion, and if so, how? No? So, paano? Whether they should affect the remuneration of the restructured limited risk distributor, and if so, how? So, yun ang kagandahan po ng transfer pricing kasi very specific po sila mag-treat na isang transaction. or a combination of these three possibilities. For instance, if it is found that the pre-restructuring activities led the full-fledged distributor to own some intangibles, while the long-established limited risk distributor does not, the arm's length principle may require these intangibles either to be remunerated upon the restructuring if they are transferred by the full-fledged distributor to a foreign associated enterprise, or to be taken into account in the determination of the arm's length remuneration of the post-restructuring activities. If they are not transferred, see Section E.2 of Part 1 above and Chapter 6 of these guidelines. No? Where a restructuring involves a transfer to a foreign associated enterprise of risk that were previously assumed by a taxpayer, it may be important to examine whether the transfer of risk only concern the future risk that will arise from the post-restructuring activities, or also the risk existing at the time of the restructuring as a result of pre-conversion activities. For instance, there is a cut-off issue. For instance, consider a situation in which a distributor was assuming bad debt risk, which it will no longer assume after it's being restructured as a limited risk distributor, and that it is being compared with a long-established limited risk distributor that never assumed bad debt risk. It may be important when comparing both situations to examine based on the guidance in section D.1.2.1 of chapter 1. No, ano ba yung chapter 1 natin? Yun yung arm's length principle. Whether the limited risk distributor that results from a conversion still assumes the risk associated with bad debts that arose before the restructuring at the time it was full-fledged, or whether all the budget risks, including those that existed at the time of the conversion, were transferred. The same remarks and questions apply for other types of restructuring, including other types of restructuring of sales activities as well as restructuring of manufacturing activities, research and development activities, or other services activities. Okay? So may ano tayo? May shout out? Ilan yung nanonood? 5 viewers. Okay. Sige. Now let's go to application to business restructuring situations. No? Selection and application of a transfer pricing method for the post-restructuring control transactions. Ito na yung after restructuring. No? Ano nangyari nung matapos na yung restructure? Kasi sa transfer pricing, you still have to analyze what happened after the restructuring. Okay. So paragraph 9.108, the selection and application of a transfer pricing method to post-restructuring control transactions must derive from the analysis of the economically relevant characteristics of the control transaction as accurately delineated. It is essential to understand what the functions, assets, and risks involved in the post-restructuring transactions are, and what party performs, uses, or assumes them. This requires information to be available on the functions, assets, and risks of both parties to a transaction, for instance, the restructured entity and the foreign associated enterprise with which it transacts. The analysis should go beyond the label assigned to the restructured entity, as an entity that is labeled as a commissioner or limited risk distributor can sometimes be found to own valuable local intangibles and to continue to assume significant market risk, and an entity that is labeled as a contract manufacturer can sometimes be found to pursue significant development activities or to own and use unique intangibles. So in post-restructuring situations, particular attention should be paid to the identification of the valuable intangibles and the economically significant risk that effectively remain with the restructured entity, including, where applicable, local non-protected intangibles, and to whether such an allocation of intangibles and risk satisfies the arm's length principle. The form of remuneration cannot dictate, no? So kung ano man yung form ng payment, kasi sometimes goods ang payment, sometimes installment. Oh, so the form of remuneration cannot dictate inappropriate risk allocations. It is the determination of how the parties actually control risk and whether they have the financial capacity to assume the risk as set out in the process of analyzing risk in Chapter 1, which will determine the assumptions of risk by the parties and consequently dictate the selection of the most appropriate transfer pricing method. So issues regarding risk and intangibles are discussed in Part 1 of this chapter. Post-restructuring arrangements may pose certain challenges with respect to the identification of potential comparables in cases where the restructuring implements a business model that is hardly found between independent enterprises. No? Kasi in that case, pagka hindi mo siya makita sa independent enterprises, then anong magiging problema mo? Wala kang comparable, so you cannot compare. Ano ba yung ating transfer pricing principle, yung arm's length principle? Ano yun? We compare the independent party transactions with the related party transactions. Kung wala kang comparable, so mahihirapan ka ngayon na i-apply yung or gamitin yung transfer pricing, no? So it should be noted that the mere fact that an arrangement is not seen between independent enterprises does not in itself mean that it is not arm's length nor commercially irrational. Furthermore, every effort should be made to determine the pricing for the restructuring transactions as accurately delineated under the arm's length principle. There are cases where comparables, including internal comparables, are available, subject to possible comparability adjustments being performed. One example of a possible application of the CAP method, yung comparable and controlled price method, would be the case where an enterprise that used to transact independently with the M&A group is acquired and the acquisition is followed by a restructuring of the now controlled transactions, subject to a review of the 5 economically relevant characteristics or comparability factors and of the possible effect of the controlled and uncontrolled transactions taking place at different times. It might be the case that the conditions of the pre-acquisition uncontrolled transactions provide a cap for the post-acquisition controlled transactions. Even where the conditions of the transactions are restructured, it might still be possible, depending on the facts and circumstances of the case, to adjust for the transfer of functions, assets, and or risks that occurred upon the restructuring. For instance, a comparability adjustment might be performed to account for the fact that a different party assumes bad debt risk. Another example of a possible application of the CAP or comparable and controlled price method would be the case where independent parties provide manufacturing, selling, or service activities comparable to the ones provided by the restructured affiliate. Given the recent development about sourcing activities, it may be possible in some cases to find independent outsourcing transactions that provide a basis for using the CAP method in order to determine the arm's length remuneration of post-restructuring control transactions. This, of course, is subject to the condition that the outsourcing transactions qualify as uncontrolled transactions and that the review of the 5 economically relevant characteristics or comparability factors provides sufficient comfort that either no material difference exists between the conditions of the uncontrolled outsourcing transactions and the conditions of the post-restructuring control transactions, or that reliable enough adjustments can be made and are effectively made to eliminate such differences. No? Kasi yan talaga ang purpose po ng transfer pricing. So when you compare, you have to eliminate the differences to make them equal. Excuse me. Yung isang aircon bahari, nakabukas. The identification of potential comparables has to be made with the objective of finding the most reliable comparables data in the circumstances of the case, keeping in mind the limitations that may exist in availability of information and the compliance cost involved. See paragraphs 3.2 and 3.8. It is recognized that the data will not always be perfect. No? Wala naman talaga perfect data. No? So there are also cases where comparables data are not found. No? So walang comparables. For instance, where the restructuring has led to fragmentation of integrated functions across several group companies in a way that is not found between unrelated parties. So pag wala bang unrelated parties, wala ng transfer pricing. Sabi ng OECD, meron pa rin transfer pricing. No? So this does not necessarily mean that the conditions of the controlled transaction as accurately delineated are not arm's length. No? So notwithstanding the difficulties that can arise in the process of searching comparables, it is necessary to find a reasonable solution to all transfer pricing cases. So following the guidance at paragraphs 2.2, even in cases where comparables data are scarce and imperfect, the choice of the most appropriate transfer pricing method to the circumstances of the case should be consistent with the nature of the controlled transactions determined in particular through a functional analysis. No? So wala ka talagang comparables. Ano yung gagamitin mo? Functional analysis. Why? Kasi pwede kang mag-compare ng kahit ibang industry sila pero somehow similar yung kanilang functions. No? So halimbawa, iba-ibang klaseng service business. Pero pag tinignan mo yung functions nila, pare-pareho silang service. So they can also be comparable. Relationship between compensation for the restructuring and post-restructuring remuneration. Ano yun? Restructuring and after the post-restructuring remuneration. There may in some circumstances be an important interrelationship between the compensation for the restructuring and an arm's length reward for operating the business post-restructuring. So this can be the case where a taxpayer disposed of business operations to an associated enterprise with which it must then transact business as part of those operations. One example of such a relationship is found in paragraph 9.74 regarding outsourcing. No? So, yun din yung example ko sa inyo kanina, yung outsourcing. Bakit? Kasi instead of ikaw yung gagawa nung isang services na yan, ipa-outsource mo, mas makakatipid ka pa. Kaya nga dumami yung mga business process outsourcing or BPOs dito sa Pilipinas. Why? Kasi sa dami ng mga companies, especially sa US, dito nila pinapa-outsource yung part of their functions. No? Another example would be where a taxpayer that operates a manufacturing and distribution activity restructures by disposing of its distribution activity to a foreign associated enterprise to which the taxpayer will in the future sell the goods it manufactures. No? So the foreign associated enterprise would expect to be able to earn an arm's length reward for its investment in acquiring and operating the business. No? Kasi pag sinabi natin na business as an economic entity, talagang kailangan mag-earn niya ng profit kasi that's the very essence of business. No? So in this situation, the taxpayer might agree with the foreign associated enterprise to forego receipt of part or all of the upfront compensation for the business that may be payable at arm's length and instead obtain comparable financial benefit over time through selling its goods to the foreign associated enterprise at prices that are higher than the latter would otherwise agreed to if the upfront compensation had been paid. No? So ayaw niyang babayaran siya ng lump sum payment. Gusto niya yung payment doon na lang sa goods na i-deliver niya. No? Kasi mas mataas as compared kung tatanggap siya ng outright payment. Alternatively, the parties which might agree to set an upfront compensation payment for the restructuring that is partly offset through future lower transfer prices for the manufactured products than would have been set otherwise. See part 1 of this chapter for a discussion of situations where compensation would be payable at arm's length for the restructuring itself. In other words, in the situation where the taxpayer will have an ongoing business relationship as supplier to the foreign associated enterprise that carries on an activity previously carried on by the taxpayer, The taxpayer and the foreign associated enterprise have the opportunity to obtain economic and commercial benefits through the relationship. So, for instance, the sale price of goods, which may explain, for instance, why compensation through an upfront capital payment for transfer of the business was foregone, or why the future transfer price for the products might be different from the prices that would have been agreed absent a restructuring operation. In practice, however, it might be difficult to structure and monitor such an arrangement. While taxpayers are free to choose the form of compensation payments, whether upfront or over time, tax administrations, when reviewing such arrangements, would want to know how the compensation for the post restructuring activity was possibly affected to take account of the foregone compensation, if any, for the restructuring itself. Specifically, in such a case, the tax administration would want to look at the entirety of the arrangements while being provided with a separate evaluation of the arm's length compensation for the restructuring and, the, and for the post-restructuring transactions. Wala pa ring shout out? Okay. So comparing the pre and post restructuring situations, a relevant question is the role, if any, of comparisons that can be made of the profits actually earned by a party to a control transaction prior to and after the restructuring. So in particular, it can be asked whether it would be appropriate to determine a restructured entity's post-restructuring profits by reference to its pre-restructuring profits adjusted to reflect the transfer or relinquishment of particular functions, assets, and risk. One important issue with such before and after comparison is that a comparison of the profits from the post-restructuring control transactions with the profits made in control transactions prior to the restructuring would not suffice given Article 9 of the OECD Model Tax Conventions provides for a comparison to be made with uncontrolled transactions, no? Kaya nga, yung Article 9, which is the basis of the arm's length principle, yun yung tinitingnan kung sufficient ba yung treatment before restructuring and after restructuring. Tama ba? Will it conforms to the Article 9 of OECD Model Convention? Kasi kung hindi sila arm's length, then magkakaroon ng adjustment. Or sometimes, ang sabi ko nga sa inyo, hindi nire-recognize yung restructuring. Comparisons of taxpayer control transactions with other control transactions are irrelevant to the application of the arm's length principle and therefore should not be used by a tax administration as the basis for a transfer pricing adjustment or by a taxpayer to support its transfer pricing policy. No? Okay. So another issue with the before and after comparisons is the likely difficulty of valuing the basket of functions, assets, and risks that were lost by the restructured entity. So keeping in mind that it is not always the case that these functions, assets, and risks are transferred to another party. That being said, in business restructuring, before and after comparisons could play a role in understanding the restructuring itself and could be part of a before and after comparability, including functional analysis to understand the changes that accounted for the changes in the allocation of profit, loss amongst the parties. In effect, information on the arrangements that existed prior to the restructuring and on the conditions of the restructuring itself could be essential to understand the context in which the post-restructuring arrangements were put in place and to assess whether such arrangements are arm's length. It can also shed light on the options realistically available to the restructured entity. The analysis of the business before and after the restructuring may reveal that while some functions, assets, and risks were transferred, other functions may still be carried out by the stripped entity. Typically, as part of the restructuring, the entity may have been purportedly stripped of intangibles or risks, but after the restructuring, it continues to carry out some or all of the functions it previously performed. Following the restructuring, however, the strip entity performs those functions under contract of foreign associated enterprise. The accurate delineation of the actual transaction between the foreign associated enterprise and the strip entity will determine the actual commercial or financial relations between them, including whether the contractual terms are consistent with the conduct of the parties and other facts of the case. Arm's length compensation for each party should be consistent with its actual functions performed, assets used, and risk assumed after the restructuring. So, for example, an M&E manufactures and distributes products, the value of which is not determined by the technical features of the products, but rather by consumer recognition of the brand. The M&E wants to differentiate itself from its competitors through the development of brands with great value. No? So by implementing a carefully developed and expensive marketing strategy. The trademarks, trade names, and other intangibles represented by the brand are owned by Company A in country A, and Company A assumes the risk associated with the ownership, development, and exploitation of those intangibles. The development, maintenance, and execution of a worldwide marketing strategy are the main value drivers of the M&E performed by 125 employees at Company A's head office. No? So the value of the intangibles results in a high consumer price for the products. Company A's head office also provides central services to the group for the group affiliates. For instance, human resource management, legal, tax. The products are manufactured by affiliate under contract manufacturing arrangements with Company A. They are distributed by affiliates who purchase them from Company A. The profits derived by Company A after having allocated an arm's length remuneration to the contract manufacturers and distributors are considered to be the remuneration for the intangibles, marketing activities, and central services of Company A. Then a restructuring takes place. Legal ownership of the trademarks, trade names, and other intangibles represented by the brand is transferred by Company A to a newly set up affiliate, Company Z in country Z, in exchange for a lump sum payment. So ito na, nag-restructure na. After the restructuring, Company A is remunerated on a cost-plus basis for the services it performs for Company Z and the rest of the group. The remuneration of the affiliated contract manufacturers and distributors remain the same. The remaining profits after remuneration of the contract manufacturers, distributors, and Company A head office services are paid to Company Z. The accurate delineation of the transactions before and after the restructuring determines that Company Z is managed by a local trust company. It does not have people, employees, or directors who have the capability to perform and who, in fact, do not perform control functions in relation to the risks associated with the ownership or the strategic development of the trademarks, trade names, or other intangibles represented by the brand. It also does not have the financial capacity to assume this risk. High-ranking officials from Company A's head office fly to country Z once a year to formally validate the strategic decisions necessary to operate the company. These decisions are prepared by Company A's head office in country A before the meeting takes place in country Z. The MNE considers that these activities are service activities performed by Company A's head office for Z. These strategic decision-making activities are remunerated at cost plus in the same way as the central services are remunerated, for instance, human resource management, legal, and tax. The development, maintenance, and execution of the worldwide marketing strategy are still performed by the same employees of Company A's head office and remunerated on a cost-plus basis. No? Okay. Based on these findings, it can be concluded that Company A continues to perform the same functions and assume the same risk as before the restructuring took place. Kaya ito yung sinasabi ng guidance, ng guidelines na titignan mo before the restructuring and after the restructuring. At ano ang transfer pricing? Substance over form. Kasi in this example, ano yung nangyari? Same pa rin yung nangyari before and after restructuring. So ano ibig sabihin? Walang restructuring na nangyari. In particular, Company A continues to have that capability and actually performs control functions in relation to the risk of exploitation of the intangibles. It also carries on the functions related to the development, maintenance, and execution of the worldwide marketing strategy. Company Z has no capability to perform control functions and does not, in fact, perform the control functions needed to assume the intangible related risk. Accordingly, the accurate delineation of the transaction after the restructuring may lead to the conclusion that this is, in substance, a funding arrangement between Company A and Company Z rather than a restructuring for the centralization of intangible and management. An assessment may be necessary of the commercial rationality of the transaction based on the guidance in section D.2 of chapter 1, taking into account the full facts and circumstances of the transaction. There will also be cases where before and after comparisons can be made because the transactions prior to the restructuring were not controlled. For instance, where the restructuring follows an acquisition and where adjustments can reliably be made to account for the differences between the pre-restructuring uncontrolled transactions and the post-restructuring controlled transactions. See example of paragraph 9.110. Whether such uncontrolled transactions provide reliable comparables would have to be evaluated in light of the guidance at paragraph 3.2. Location savings. Location savings can be derived by an M&A group that relocates some of its activities to a place where costs such as labor costs, real estate costs are lower than in the location where the activities were initially performed. Account being taken of the possible costs involved in the relocation, such as termination costs for the existing operation, possibly higher infrastructure costs in the new location, possibly higher transportation costs if the new operation is more distant from the market, training cost of local employees, where a business strategy aimed at deriving location savings is put forward as a business reason for restructuring. The discussion section D.1.5 of chapter 1 is relevant. That is about arm's length principle. So where significant location savings are derived further to a business restructuring, the question arises of whether and if so, how the location savings should be shared among the parties. In addressing this matter, the guidance in section D.6 of chapter 1 is relevant. Ilan pa yung viewers natin, Ari?
6 viewers.
Okay. So take the example of an enterprise that designs, manufactures, and sells brand name clothes. Assume that the manufacturing process is basic and that the brand name is famous and represents a highly valuable intangible. No? Kaya nga ang sabi ko na sa inyo in advance, uh, karamihan ng intangibles, no? Yun din yung mga issues dito sa business restructuring. No? So, karamihan intangibles ang issues sa restructuring. Assume that the enterprise is established in country A where the labor costs are high and that it decides to close down its manufacturing activities in country A and to relocate them in an affiliate company in country B where labor costs are significantly lower. No? So, bakit ang daming nagpapa-outsource sa China? Kasi lower po yung labor cost. The enterprise in country A retains the rights on the brand name and continues designing the clothes. Further to this restructuring, the clothes will be manufactured by the affiliate in country B under a contract manufacturing arrangement. The arrangement does not involve the use of any significant intangible owned by or licensed to the affiliate or the assumption of any significant risk by the affiliate in country B. Once manufactured by the affiliate in country B, the clothes will be sold to the enterprise in country A, which will on sell them to third-party customers. No? Assume that this restructuring makes it possible for the group formed by the enterprise in country A and its affiliate in country B to derive significant location savings. The question arises whether the location savings should be attributed, attributed to the enterprise in country A or its affiliate in country B, or both, and if so, in what proportions. No? So in such an example, given that the relocated activity is a highly competitive one, it is likely that the enterprise in country A has the option realistically available to it to use either the affiliate in country B or a third-party manufacturer. As a consequence, it should be possible to find comparable data to determine the conditions in which a third party would be willing at arm's length to manufacture the clothes for the enterprise. In such a situation, a contract manufacturer at arm's length would generally be attributed very little, if any, part of the allocation savings. Doing otherwise would put the associated manufacturer in a situation different from the situation of an independent manufacturer and would be contrary to the arm's length principle. As another example, assume now that an enterprise in country X provides highly specialized and quality engineering services to independent clients. It charges a fee to its independent clients based on a fixed hourly rate that compares with the hourly rate charged by competitors for similar services in the same market. Suppose that the wages for qualified engineers in country X are high. The enterprise subsequently subcontracts a large part of its engineering work to a new subsidiary in country Y. The subsidiary in country Y hires equally qualified engineers to those in country X for substantially lower wages, thus deriving significant location savings for the group formed by the enterprise, and its subsidiary clients continue to deal directly with the enterprise in country X and are not necessarily aware of the subcontracting arrangement. No? Excuse me. For some period of time, the well-known enterprise in country X can continue a charge to can continue to charge its services at the original hourly rate despite the significantly reduced engineering costs. After a certain period of time, however, it is forced due to competitive pressure to decrease its hourly rate at an amount that would not allow the company in country X to cover the wages for qualified engineers in country X, but that would still yield a benefit if those services are provided by qualified engineers in country Y. Part of the location savings are passed on to its clients. In this case, also the question arises of which parties or party within the M&A group should at arm's length be attributed the part of the location savings not passed on to the clients, the subsidiary in country Y, the enterprise in country X, or both, and if so, in what proportions. No? In determining which party or parties should be attributed to the location savings at arm's length, it will be important to consider the functions, risks, and assets of the parties, as well as the options realistically available to each of them. In this example, assume that there is a high demand for the type of engineering services that the company in country X sells. Assume also that the subsidiary in country Y is the only company operating in a lower cost location that is able to provide such services with the required quality standard, and the company Y is able to withstand competitive pricing pressures because the technical know-how it has established acts as barrier to competition. Furthermore, the company in country X does not have the option of engaging qualified engineers in country X to provide the services, as the cost of their wages would be too high compared to the hourly rate charged to clients. Considering this, the enterprise in country X does not have many other options available to it than to use this service provider. The remuneration payable by company X to company Y should take into account the location savings created by company Y. So in addition to the value of its services, including any intangibles used in providing those services, in some instances, the nature of the contributions made by the enterprise in country X and its subsidiary in country Y may meet the criteria for the use of a transactional profit split method. So, ganun yun. Pagka wala kang comparables, you use the profit split method. No? Okay. So, yan po yung ating discussions on the business restructuring. No? So, nakailang oras tayo, Hari? 1 hour and 10 minutes. So, mayroon pa tayong 50 minutes. No? So, wala tayong questions. Wala ring ano. Okay. So, tuloy po tayo sa annexes. Yung sa transfer pricing guidelines, tapos na natin yung mga annexes doon ng ano, no? Country by country reporting, and then yung local files, and then the master file, no? So, let's go to itong mga annexes po dito na hindi pa natin na tapos. Why? Kasi sa dami ng mga annexes, may mga na-discuss na tayo along the way. Although marami pa rin tayong mga kulang, no? Itong mga checklist, tapos na natin to yung mga primary checklist. Okay. So, balikan natin yung mga annexes sa Annex 2, yung map APA, at saka yung sa Annex 1, yung sa comparability. Itong Annex 2 to Chapter 4, ito yung sa Mutual Agreement Procedure and the Advanced Pricing Arrangement. Hindi natin ito matapos ng 2 hours, no? Kaya next time natin ito i-discuss. Meron tayong mga ibang hindi na-discuss dito sa annexes. Yan yung balikan natin. Ito yun yung annex to chapter 3. Yung example ng comparability adjustment. So, pero meron pa yung profit split. Allocate residual profit split. Yun. Itong ano na discuss na natin do no, yung sensitivity of gross and net profit indicators, no? Natapos na natin 'yan. Pero yung hindi pa natin na ano, ay yung monitoring procedures sa mga business community na 'yan eh. So sensitivity of gross and net profit indicators, bakit sila sensitive? Kasi dagdagan mo lang yung cost, mag-iiba na yung gross profit at saka yung net profit, no? So, tapos na natin to. So, dito tayo sa Annex 2 to Chapter 2. Ito po yung example to illustrate the application of the residual profit split method. Okay. So, as a way of review, ano po ba yung ating mga transfer pricing methods? So, we have 5 transfer pricing methods. We have the comparable uncontrolled price method, the resale price method, the cost plus method, transactional net margin method, at ito ang profit split method. No? So, under the profit split method, meron po tayong dalawa, the residual profit split and the contribution profit split. No? So, ang dito sa annex na to, ang ni-explain dito is about the residual profit split method. No? Okay. So, Chapter 2, Part 3, Section C, ito yung guidelines on the application of the profit split. No? Okay. The adjustment and assumption about arm's length arrangement in the examples that follow are intended for illustrative purposes only and should not be taken as prescribing adjustment and arm's length arrangements in actual cases or particular industries. While this seek to demonstrate the principles of the sections of the guidelines to which they refer, those principles must be applied in its case according to the specific fact and circumstances of the case. So, balik-balik lang yan dito sa guidelines, no? So, specific facts and circumstances of the case. So, yun yung titingnan mo if you make the analysis. The success of an electronic product is linked to the innovative technological design, both of its electronic processes and of its major component. Excuse me. That component is designed and manufactured by Associated Company A, is transferred to Associated Company B, which designs and manufactures the rest of the product, and is distributed by Associated Company C. Information exists to verify by means of a resale price method that the distribution functions and risk of Company C are being appropriately rewarded by the transfer price of the finished product from B to C. The most appropriate method to price the component transferred from A to B may be a cap if a sufficiently similar comparable could be found. No? See paragraph 2.15 of the guidelines. However, since the component transferred from A to B reflects the innovative technological advance enjoyed by Company A in this market, This example, it proves impossible after the appropriate functional and comparability analysis have been carried out to find a reliable cap to estimate the correct price that A could command at arm's length for its product. Calculating a return on A's manufacturing cost could, however, provide an estimate of the profit element which would reward A's manufacturing functions, ignoring the profit element attributable to the intangible used therein. A similar calculation could be performed on company B's manufacturing cost to give an estimate of B's profit derived from its manufacturing functions, ignoring the profit element attributable to its intangibles. No? So, samantala ang intangible is very important, pero ignore lang nila yung profit. No? Since B's selling price to C is known and is accepted as an arm's length price, the amount of the residual profit accrued by A and B together from the exploitation of their respective intangible property can be determined. See paragraphs 2.114 and 2.127 of the guidelines. At this stage, the proportion of this residual profit properly attributable to its enterprise remains undetermined. The residual profit may be split based on an analysis of the facts and circumstances that might indicate how the additional reward would have been allocated at arm's length. Paragraph 2.127 of the guidelines. The R&D activity of its company is directed towards technological design relating to the same class of item, and it is established for the purposes of this example that relative amounts of R&D expenditure reliably measure the relative value of the company's contributions. See paragraph 2.126 of the guidelines. This means that each company's contribution to the product's technological innovation may reliably be measured by their relative expenditure on research and development. So that if A's R&D expenditure is 15 and B's 10, the residual could be split 3 over 5 for A and 2 over 5 for B. No? Some figures may assist in the following example. So, dito naman, ini-split yung profit. Bakit? Kasi, um, may profit na may contributions lahat. No? So, hindi mo siya pinpoint kasi bawat isa nag-contribute dun sa profit. So, ano ang dapat? Dapat isa may share dun sa profit. No? So, profit and loss of A and B. No? So, sales for A is 50, for B, 100. Less purchases, 10 for A, B, 50. Manufacturing cost for A, 15, kay B, 20. No? So, how much is the gross profit? For A is 25, for B is 30. No? So, ang liit lang ng kay B kasi ang laki ng kanyang sales, malaki din yung kanyang expenses. Less research and development for A, 15, for B, 10. No? So, operating expenses for A is 10, kay B, 10 din. No? So, anong nangyari? Si A, 0 ang profit. Si B, 10 ang profit. No? So, determine routine profit on manufacturing by A and B and calculate total residual profit. No? It is established for both jurisdictions that third-party comparable manufacturers without innovative intangible property earn a return on manufacturing cost, excluding purchases of 10% ratio of net profit to the direct and indirect cost of manufacturing. No? So, yan yung sinasabi ng paragraph 2.127 of the guidelines. When we say guidelines, we refer to the 2017 transfer pricing guidelines. A's manufacturing costs are 15, and so the return on cost would attribute to A manufacturing profit of 1.5. B's equivalent costs are 20. No? Nakikita natin sa information, 20. And so the return on cost would attribute to B a manufacturing profit of 2.0. The residual profit is therefore 6.5. No? So, ang residual profit dito is 10, no? Kasi group lang naman sila. Um, yung profit attributable to B at saka A was determined, ang naiwan is 6.5 na lang na profit. So, arrive at by deducting from the combined net profit of 10, the combined manufacturing profit of 3.5. So, since 6.5 yung uh, residual profit, no? So, tanggalin mo yun sa 10, yung manufacturing profit is 3.5, which is 2 kay B at 1.5 kay A, no? So, yun yung manufacturing profit. Ang residual profit is 6.5. So, depende na yan kung anong ratio nila hahatiin ni A at saka B, yung 6.5, no? So, sabi po dito sa footnote, that this 10% return does not technically correspond to a cost-plus markup in its strictest sense because it yields net profit rather than gross profit. But neither does the 10% return correspond to a T&M margin in its strictest sense since the cost base does not include operating expenses. The net return on manufacturing cost is being used as a convenient and practical first stage of the profit split method because it simplifies the determination of the amount of residual net profit attributable to intangible properties. So take note sa mga gumagawa ng transfer pricing analysis, this can be your explanation, no? Kung bakit pagdating sa application ng transfer pricing method, bakit itong method na to, yung 5 methods, 'di ba sa transfer pricing guidelines ng Pilipinas, apply all the methods and then uh, recommend the best method. So, ito yung mga justifications natin. So, these are very important. At nandito po ito sa transfer pricing guidelines. Okay. Next is allocate the residual profit. Magkano residual profit? 6.5. No? The initial allocation of profit, 1.5 to A and 2 to B. No? Kasi ang income, di ba, yung 10. No? So, rewards the manufacturing functions of A and B, but does not recognize the value of the respective research and development that has resulted in a technologically advanced product. That residual can therefore be split between A and B with their share of total R&D costs. Since for the purpose of this example, it can reliably be assumed that the company's relative expenditure of research and development accurately reflects the relative contributions to the value of the product's technological innovation. A's research and development expenditure is 15 and B's 10. So, magkano yan? 25. Giving combined R&D expenditure of 25. The residual is 6.5 which may be allocated 15 over 25 to A and 10.25 to B, resulting in a share of 3.9 and 2.6 respectively as below. No? Kasi ang ginamit yung contribution nila sa research and development. Kasi pag gumawa ka ng profit split method, depende po yan kung anong gamitin mo na divisor at saka paano mo sila ipo-prorate. So in this case, pino-prorate nila dun sa value ng intangibles which is the result of the research and development. No? So ano yung ginamit nila na ratio yung sa research and development. No? So A share 6.5 is 15 over 25, so 3.9. And B share sa 6.5 is 10 over 25 or 2.6. No? So, recalculate profits. A's net profits would thus become 1.5 plus 3.9. No? Equals 5.4. B's net profits would thus become 2.0 plus 2.6 equals 4.6. So, that gives a total of 100, no? 10. Kasi 5.4 plus 4.6 is 10. No? Okay, so ito na ngayon yung revised profit and loss for tax purposes. No? For A and B, the sales is 55.4 and 100. Less purchases na 10 and manufacturing cost 15. The gross profit for A is 30.4. For B, the purchases is 55.4. The manufacturing cost is 20. So, the gross profit of B is 24.6. No? less research and development na 15, operating expenses na 10. So, 25. So, magkano na yung kay A? 5.4. No? Instead, kanina na 0. Bakit? Kasi nakaibilang lahat yung kita. So, in this case, since nag-split siya ng profit, dinivide nila yung profit. So, ito na yung bagong calculation. No? So, B has a gross profit of 24.6, and then the research and development 10, operating expenses 10. So, mayroon pa siyang expenses na 20. Less mo dun sa 24.6, meron siyang 4.6 na natira na net profit. No? So, wala nagkaroon na net profit na 0. Why? Kasi instead na kasi B is 0 lang yung kanyang profit, nag-split, kasi napunta lahat kay B ang profit, so in-split nila. So, since mas malaki ang contribution na A, mas malaki ang contribution niya na share in the profit. So, that makes 5.4 for A and 4.6 for B. Okay. Ito yung note. The example is intended to exemplify in a simple manner the mechanisms of a residual profit split and should not be interpreted as providing general guidance as to how the arm's length principle should apply in identifying arm's length comparables and determining an appropriate profit split. So, example lang po ito. No? So, it is important that the principles that it seeks to illustrate are applied in its case, taking into account the specific facts and circumstances of the case. In particular, it should be noted that the allocation of the residual profit split may need considerable refinement in practice in order to identify and quantify the appropriate basis for the allocation. Where research and development expenditure is used, differences in the types of research and development conducted may need to be taken into account. For instance, because different types of research and development may have different levels of risk associated with them, which would lead to different levels of expected returns at arm's length. Relative levels of current R&D expenditure also may not adequately reflect the contribution to the earning of current profits that is attributable to intangible property developed or acquired in the past. So, yun po yung explanation dun sa profit split. Okay. Annex 3 to Chapter 2 is the illustration of different measures of profits when applying a transactional profit split method. Kanina, residual profit split. Ito naman, transactional profit split. Okay. Okay. So, Chapter 2, Part 3, Section C of these guidelines for general guidance on the application of the transactional profit split method. The assumptions about arm's length arrangements in the following examples are intended for illustrative purposes only and should not be taken as prescribing adjustments and arm's length arrangements in actual cases of particular industries. So while they seek to demonstrate the principles of the sections of the guidelines to which they refer, those principles must be applied in its case according to the specific facts and circumstances of the case. Kaya nga pag nag-aaral po tayo ng mga transfer pricing cases, anong palaging pabalik-balik na sinasabi ng guidelines? According to the specific facts and circumstances of that case. Depending on the specific facts and circumstances. So, yun yung mga maririnig natin. Why? Kasi kahit na may mga unan pa na cases, hindi pwedeng i-apply natin yan on the cases that we will encounter. No? So, furthermore, the comments below relate to the application of a transactional profit split method in the situations where given the facts and circumstances of the case, and in particular, the comparability, including functional analysis of the transaction and the review of the information available on uncontrolled comparables. Such a method is found to be the most appropriate method to be used. No? So below are some illustrations of the effect of choosing a measure of profits to determine the combined profits to be split when applying a transactional profit split method. Assume A and B are two associated enterprises situated in two different tax jurisdictions. Both manufacture the same widgets and incur expenditures that results in the creation of an intangible asset which they can mutually use. For the purpose of this example, it is assumed that the nature of this particular asset is such that the value of the asset contribution attributable to each of A and B in the year in question is proportional to A and B's relative expenditure on the asset in that year. It should be noted that this assumption will not always be true in practice. This is because there may be cases where the relative values of asset contributions attributable to each party would be based on accumulated expenditures from the prior as well as current years. Assume A and B exclusively sell products to third parties. Assume that it is determined that the most appropriate method to be used is residual profit split method. That the manufacturing activities of A and B are simple, non-unique transactions that should be allocated an initial return of 10% of the cost of goods sold, and that the residual profit should be split in proportion to A's and B's intangible asset expenditure. The following figures are for illustration only. No? So sales of A, 100, B, 300, the combined uh, sales of A and B is 400. No? So cost of goods sold for A is 60, for B 170, combined 230. Gross profit for A is 40, B 130, combined is 170. Overhead expenses for A 3, for B 6, and then combined overhead expenses is 9. Other operating expenses is for A is 2, B is 4, and combined is 6. Intangible asset expenditure for A is 30, for B is 40, and the combined uh, profit for A and B is 70. No? So operating profit for A is 5, B 80, and then the combined for A and B is 85. No? So paano i-split po itong profit? Step 1, determining the initial return for the non-unique manufacturing transactions. Cost of goods sold plus the 10% in this example. No? So for A, 60 plus 60 times 10% equals 66. No? Ano yung 60 dito? This is the cost of goods sold. No? For B, 170. No? So 170 times 10% equals plus 170 plus 170 equals 187. No? So, initial return for the manufacturing transactions of A is 6. Initial return for the manufacturing transactions of B is 17. No? Bakit? Bakit ang initial return? Di ba? 66 minus yung 60 na cost of goods sold na 60. So, 6. Dito naman kay B, 187 yung initial return niya, minus the 170 na cost of goods sold, so 17. No? So total profit allocated through initial returns, 6 plus 17 equals 23. Yan na yung sa group na return, no? Na total profit. Step 2, determining the residual profit to be split. No? So in case it is determined as the operating profit, combined operating profit is 85. Profit already allocated initial returns for manufacturing transactions, 23. So the residual profit to be split in proportion to A's and B's intangible asset expenditure is 62. No? Bakit? Kasi 85 minus 23 equals 62. So residual profit allocated to A, 62 multiply by 30 over 70 is equals 26.57. No? 62 multiply by 40 over 70, 35.43. No? And then 6 is the initial return plus 26.57 na residual profit equals 32.57. And then for B, 17 yung initial return plus yung 35.43 0.43 niya na residual profit equals 52.43. The total is 85, no? Bakit ano yung account natin dito? Yung splitting ng 85 niya na combined operating profit, no? So, magkano yung mapupunta kay um, A, 32.57. Magkano yung pupunta kay B? 52.43. So, magkano yung total niyan? 85. No? So, in case it is determined as the operating profit before overhead expenses, assuming it is determined that the overhead expenses of A and B do not relate to the transaction examined and should be excluded from the determination of the combined profit to be split. Sales. A, 100, B, 300, so combined is 400. Cost of goods sold, A, 60, B, 170, combined 230. No? So, same data lang yung sa kanina. So, the combined operating profit before overhead expenses is 94. Profit already allocated, initial return for manufacturing transactions is 23. Residual profit before overhead expenses to be split in proportion to A's and B's intangible assets expenditures is 71, no? So residual profit allocated to A is 71, no? Times 30 over 70 equals 30.43. Residual profit allocated to B, 71 times 40 over 70 equals 40.57. So total profits allocated to A, 6 yung initial return plus the residual plus 30.43 residual minus 3 na overhead expenses, no? So that is 33.43. Kay B naman, the allocated profits 17, the initial return plus 40.57 na residual, no? 6 overhead expenses. No? Okay, so how much now is the total? 33.43 yung profit for A, and for B, the profit should be 51.57 that gives us the total of 85. No? So yan yung example lang naman po to sa pagko-compute ng residual profit split. Okay, so as shown in the above example, excluding some specific items from the determination of the combined profits to be split implies that each party remains responsible for its own expenses in relation to it. As a consequence, the decision whether or not to exclude some specific items must be consistent with the comparability, including functional analysis of the transaction. As another example, in some cases, it may be appropriate to back out a category of expenses to the extent that the allocation K used in the residual profit split analysis relies on those expenses. So, for example, in cases where relative expenditure contributing to the development of the intangible asset is determined to be the most appropriate profit split factor, residual profits can be based on operating profits before the expenditure. After determining the split of residual profits, each associated enterprise then subtracts its own expenditure. This can be illustrated as follows. Assume the facts are the same as in the example at paragraph 2 above, and assume the overhead expenses are not excluded from the determination of the residual profit to be split. Step 1. Determining the basic return for the manufacturing activities, cost of goods sold, plus 10% in this example. So, step 2, determining the residual profit to be split. In case it is determined as the operating profit after intangible asset expenditure, no? So, in case it is determined as the operating profit before intangible asset expenditure, no? So, sales, A 100, B 300, combined A and B 400. Cost of goods sold, A 60, B 170, combined 230. Gross profit, A 40, B 130, A plus B 170. No? So overhead expenses for A is 3, 6 for B, total is 9. Other operating expenses for A 2, B 4, combined 6. Operating profit, intangible asset expenditure 35, B 120, so combined 155. Intangible asset expenditure 30 for A, B 40, combined A and B 70. Operating profit for A 5, B 80, so combined profit is 85. No? So combined operating profit before intangible asset expenditure 155. Profit already allocated initial return for manufacturing transactions 23. The residual profit before intangible asset expenditure to be split in proportions to A's and B's intangible asset expenditure is 132. So the residual profit allocated to A is 132 times uh, 30 over 70 equals 56.57. Residual profit allocated to B, 132 times 40 over 70. So that gives us the total of 75.43. Total profits allocated to A, 6, the initial return, plus 56.57. Residual minus the 30 intangible asset expenditure. So we have the total profits allocated to A of 30.57. Total profits allocated to B, 17 initial return plus 75.43 residual minus 40 the intangible assets expenditure. So we have a total of 85. A and B are allocated the same profits as in the case where the profit to be split is determined as the operating profit after intangible asset expenditures. No? This example illustrates the fact that when the allocation K used to split, the residual profit relies on a category of expenses incurred during the period. It is indifferent whether the residual profit to be split is determined before said expenses and the expenses are deducted by its party, or whether the residual profit to be split is determined after said expenses. The outcome can, however, be different in the case where the split factor is based on the accumulated expenditure of the prior as well as current years. No? See paragraph 2 above. Okay. Anong oras na, Ari? Ilang oras na ito? 47 minutes, no? Kasi meron pa dito ang example ng working capital adjustment. No? So, may time pa. Pupusin natin to. Kasi maganda tong uh, working capital adjustment, no? This is, kakaroon din tayo ng separate na video dito. Pero, explain na rin natin po sa inyo para just to complete the guidelines, no? Just to complete the guidelines kasi ayoko may naiiwan tayo. Okay, so this is annex to the chapter 3 on the example of a working capital adjustment, no? See chapter 3, section 8.6 of these guidelines for general guidance on comparability adjustment, no? The assumptions about arm's length arrangements in the following examples are intended for illustrative purposes only and should not be taken as prescribing adjustments and arm's length arrangements in actual cases of particular industries. While they seek to demonstrate the principles of the section of the guidelines to which they refer, those principles must be applied in its case according to the specific facts and circumstances of the case. So mapapansin niyo ilang beses nang pabalik-balik sinasabi ng guideline according to the specific facts and circumstances of the case. No? So hindi ka pwedeng mag-assume. This example is provided for illustration purposes as it represents one way, but not necessarily the only way, in which such an adjustment can be calculated. Furthermore, the comments below relate to the application of a transactional net margin method in the situations where, given the facts and circumstances of the case, and in particular the comparability including functional analysis of the transaction and the review of the information available on uncontrolled comparables as a method is found to be the most appropriate method to be used. No? So introduction. This simple example shows how to make an adjustment in recognition of differences in levels of working capital between a tested party, test co, and a comparable COMCO. See paragraphs 3.47, 3.54 of these guidelines for general guidance on comparability adjustments. Working capital adjustment may be warranted when applying the transactional net margin method. No? So, paano ba kinocompute ang working capital? Working capital is current assets less liabilities equals working capital. No? So, ganyan po ang pag-compute dyan. In practice, they are usually found when applying a transactional net margin method, although they might also be applicable in cost plus or resale price methods. Working capital adjustment should only be considered when the reliability of the comparables will be improved and reasonably accurate adjustments can be made. So they should not be automatically made and would not be automatically accepted by tax administrations. So why make a working capital adjustment? Bakit po tayo gagawa ng working capital adjustment? Why? Kasi, di ba, sabi na natin magkaroon tayo ng comparability analysis. And if hindi natin makita na yung related party is similar or same with that of the independent party, then kung po pwede, gagawa tayo ng adjustment to make them similar. Kaya maggagawa tayo ng working capital adjustment. Kung halimbawa, hindi sila pareho ng capital, so gagawa tayo ng adjustment to make them similar. Okay. By carrying high accounts receivable, a company is allowing its customers a relatively long period to pay their accounts. It would need to borrow money to fund the credit terms and or suffer a reduction in the amount of cash surplus which it would otherwise have available to invest. In a competitive environment, the price should therefore include an element to reflect these payment terms and compensate for the timing effect. Since sabi na natin working capital is current assets less current liabilities, so anong pinag-uusapan natin dito? Accounts payable, accounts receivable, yun yung mga accounts that affect the working capital. The opposite applies to higher levels of accounts payable. By carrying high accounts payable, a company is benefiting from a relatively long period to pay its suppliers. It would need to borrow less money to fund its purchases and or benefit from an increase in the amount of cash surplus available to invest. In a competitive environment, the cost of goods sold should include an element to reflect these payment terms and compensate for the timing effect. A company with high levels of inventory would similarly need to either borrow to fund the purchase or reduce the amount of cash surplus which the company is able to invest. Note that the interest rate might be affected by the funding structure, where the purchase of inventory is partly funded by equity or by the risk associated with holding specific types of inventory. Making a working capital adjustment is an attempt to adjust for the differences in time value of money between the tested party and potential comparables, with an assumption that the difference should be reflected in profits. The underlying reasoning is that a company will need funding to cover the time gap between the time it invests money, pays money to supplier, and the time it collects money from customers. This time gap is calculated as the period needed to sell inventories to customers plus the period needed to collect money from customers less the period granted to pay debts to suppliers. The process of calculating working capital adjustments identify differences in the levels of working capital. So yan yung letter A. Generally, trade receivables, inventory, and trade payables are three accounts considered. Kasi nga sabi natin, current assets, less current liabilities. So ano yung nasa current assets? Accounts receivable. Ano yung sa current liabilities? Accounts payable. No? So the transactional net margin method is applied relative to an appropriate base, for example, cost, sales, or assets. See paragraph 2.64 of the guidelines. If the appropriate base is sales, For example, then any differences in working capital levels should be measured relative to sales. Letter B, calculate a value for differences in levels of working capital between the tested party and the comparable relative to the appropriate base and reflecting the time value of money by use of an appropriate interest rate. Letter C, adjust the result to reflect differences in levels of working capital. The following example adjust the comparables result to reflect the tested parties' levels of working capital. Alternative calculations are to adjust the tested parties' result to reflect the comparables levels of working capital or to adjust both the tested party and the comparables results to reflect zero working capital. Bakit mo i-zero yung working capital? Kasi mag-a-adjust ka to make them equal. No? Okay. So ito yung example of calculating working capital adjustments. The following calculations is hypothetical. Hypothetical lang po, no? For illustration purposes. It's only to demonstrate how a working capital adjustment can be calculated. No? So, test ko, ito yung sales niya, year 1, year 2, year 3, year 4, hanggang year 5. No? And then, ito din yung earnings niya before interest and tax. No? Ibig sabihin, hindi pa dinidak yung interest expense niya, ito yung kanyang kita. Year 1, year 2, year 3, year 4, hanggang year 5. No? So, earnings before income and tax divided by sales or percentage. No? So, year 1, 0.8%, year 2, 1%, year 3, 1.3%, year 4, 1.3%, and year 5, 0.9%. So, yun yung earnings before interest tax niya over sales. Yun yung ratio. So, working capital at end of year. Trade receivables, inventories, trade payables, receivables plus inventory minus payables. No? So, yan yung total niya, year 1 to year 5. And then, receivables plus interest minus payables over sales. So, ito na yung kanyang ratio ng working capital niya. No? So, for year 1, 25.6%, year 2, 25.8%, year 3, 24.1%, year 4, 26.7%, and year 5, 29.3%. No? Si Comco naman, no, si tested party yung una, sinasabi natin. Sino yung comparable niya? Ito yung comparable company year 1 to year 5. No? So yung sales niya for the first 5 years, and then the earnings before interest and tax, and then yung earnings before interest and tax over sales niya. So ito yung ratio na ng kanyang earnings over sales, no? So for year 1, 1.32%, year 2, 2.96%, year 3, 2.59%, year 4, 3.31%, and for year 5, 4.95%. Working capital at end of year, trade receivables niya, inventory, trade payables, and then the receivables plus inventory minus payables. No? So yun yung matira doon, yun yung working capital. And then the receivables plus interest minus payables divided by sales. No? So yun na yung year 1, 19.9%, year 2, 20.6%, year 3, 28.7%, year 4, 24.5%, and year 5, 24.6%. Okay. Ito na yung working capital adjustment. Paano mo i-adjust yung capital para si test company at saka si comparable company natin similar. No? Kasi yan ang purpose ng arms and principle, and yan ang purpose ng transfer pricing analysis. Okay. So, working capital adjustment year 1 to 5. The test ng company, yung ratio niya ng receivable plus interest minus payable over sales. So, ito yung ratio niya, year 1 to year 5. Yung comparable company naman, Receivable plus interest minus payable over sales, ito yung ratio niya, year 1 to 5. So, magkano yung difference? Difference ng dalawa. Kasi bakit natin hahanapin yung difference? Because nagko-compare nga tayo. At sino yung kino-compare natin? Si test ko at saka si comp ko. No? So, ano yung difference nila? Hindi sila similar. Bakit? Magkano yung difference nila pag, sa ratio? 5.7% year 1, year 2, 5.1%, year 3, negative 4.7%, year 4, 2.1%, and year 5, 4.7%. No? How much is the interest rate? Dito sa year 1, 4.8, 5.4 ng year 2, 5.0%, year 3, year 4, 5.5%, 4.5%. Saan po natin kinukuha itong interest rate? Usually, this is the legal rate of interest. And sometimes, ito yung central bank offered rate natin dito sa Pilipinas. Sa Europe, ito yung London LIBOR nila, no? Or London Interbank offered rate. No? Sa Japan, yung Japan interbank offered rate. No? So, paiba-iba yan. Kung sa Australia, Canada, iba-iba yung interest rate na legal. No? So, hindi sila pare-pareho. So, adjustment, no? At ano naman to ang adjustment? Yung difference kanina doon sa ratio ng working capital over sales at saka yung interest, magkano yung difference niya, no? So, year 1, 0.27%, year 2, 0.28%, year 3, negative 0.23%, year 4, 0.12%, and year 5, 0.21%. So, si comparable company, magkano yung earnings before interest and taxes niya over sales na ratio is 1.32%. No? Tapos sa year 2, 2.96%, year 3, 2.59%, year 4, 3.31%, year 5, 4.95%. Bakit yung kay Comco ang ginamit natin dito? Kasi siya yung independent party. So anong hinahanap natin? Na yung kay test ko maging similar kay Comco, no? So magkano yung difference? Ang working capital adjusted ng sales for Comco is 1.59%, year 2 3.24%, for year 3 2.35%, no? And then year 4 3.43%, and then for year 5 5.16%. So magkano po paano po natin nakuha itong working capital na adjusted? Ito yung interest na adjustment 0.27 plus yung earnings before interest and taxes over sales ni comparative na 1.32%. So magkano yung working capital adjustment for the dapat doon kay test ko. Dapat ito yon 1.59%. No? So, year 2, 3.24%, year 3, 2.35%, year 4, 3.43%, and year 5, 5.16%. No? Okay. Ito naman yung observations or explanations. An issue in making working capital adjustment is what point in time are the receivables, inventory, and payables. Kaya nga, current assets and current liabilities. Compared between the tested party and the comparables. The above example compares their levels on the last day of the financial year. Bakit last day of the financial year? Yun ang kinukuha natin na ending balance, no? Na nasa ledger natin yan, sa books of accounts natin. At yun ang dinadala natin sa trial balance, and dinadala po natin na balance sa ating financial statement. This may not, however, be appropriate if this timing does not give a representative level of working capital over the year. In such cases, averages might be used if they better reflect the level of working capital over the year. A major issue in making working capital adjustment involves the selection of the appropriate interest rate or rates to use. The rate or rates should generally be determined by reference to the rate or rates of interest applicable to a commercial enterprise. Kaya sabi natin, central bank rate, no? Kaya because sino ang involved dito? Commercial enterprises, no? So applicable to a commercial enterprise operating in the same market as the tested party. In most cases, a commercial loan rate will be appropriate. In cases where the tested party's working capital balance is negative, that is, payable is greater than receivables plus inventory, a different rate may be appropriate. The rate used in the above example reflects the rate at which TestCo is able to borrow funds in its local market. This example also assumes that the same interest rate is appropriate for payables, receivables, and inventory, but that may or may not be the same in practice. Where different rates of interest are found to be appropriately applicable to individual classes of assets or liabilities, the calculation may be considerably more complex than shown above. No? The purpose, ito na po ha, the purpose of working capital adjustment is to improve the reliability of the comparables. There is a question whether working capital adjustments should be made when the results of some comparables can be reliably adjusted while the results of some others cannot. No? So bakit tayo mag-a-adjust ng working capital? Because in our previous study, pag may differences sa working capital, may effect po yan sa overall na operation ng business, no? Kasi especially is if yung working capital na isang ng test company is masyadong malaki compared to the comparables. So, kasi yung malaking working capital has a cost of money, no? Bakit diyan mo nilagay yung marami mong pera na sometimes is sobrang-sobra na, no? So, may bearing po yan. Ilang oras na tayo, Hari? 2 hours, 6 minutes. Ha? 2 hours, 6 minutes. 6 minutes? Okay, so tama lang, no? So, actually, itong mga iba, mga guide na to ng mga tax authorities na binigay sa kanila ng OECD. So, pwedeng hindi na natin to i-discuss. So, more or less, we finish the OECD transfer pricing guidelines. No? So, yung mga susunod po natin na live streaming, magdi-discuss tayo muna bago tayo pupunta sa mga cases, i-discuss ko muna sa inyo yung mga salient features. Siguro, Hari, doon tayo kukuha doon sa aking basic transfer pricing book, no? Kasi po, doon sa basic transfer pricing book ko na ginawa ko noong 2013, yun po yung nag-research ako sa maraming mga sources, no? Hindi lang dito sa OECD, although sabi ko nga sa inyo, naka-anchor dito din sa OECD transfer pricing guidelines, lahat ng transfer pricing study. So, doon po tayo magdi-discuss, and along the way, magkakaroon na tayo ng mga discussions. What is the need of the time? And what is the need of the time? The documentation. So, diyan po tayo magpo-focus. So, next time, siguro magpo-focus muna tayo, especially sa preparation ng documentation for transfer pricing purposes. No? So, i-discuss natin yan isa-isa, yung mga source documentation. Kasi, papansin natin, doon nahihirapan yung ating mga accountants. No? And even the transfer pricing team, doon po nahihirapan. Kaya, so doon tayo talaga magpo-focus ngayon, especially now na approaching na yung filing. So, dapat lahat makapag-comply. Although there is a threshold, no, na hindi na dapat mag-attach, pero during the audit naman, kasama yung evaluation pa rin ng transfer pricing. Pag ready na lang tayo, kasi pagka nakikita ng examiner na may material na transactions for the related parties, din i-apply niya yung transfer pricing audit. Okay? So, wala talagang question. May viewers pa tayo? 5 viewers. Okay. Sige. So, with that, I would like to say thank you and let's call it a night. Good evening po.